You're in the market for a mortgage and your debt to income ratio is holding you back, or you want to get approved for more, then this is a video that you want to watch because I'm going to explain exactly how to lower that ratio without paying a penny. And I'm going to explain how to remove those negative items that could possibly be holding you back from getting approved for more. Now, if this is your first time here, my name is Kristen and I fix credit for a living. I've got over videos that explain step by step how you can do this for free. I give you all my secrets and post many times per week. First, smash that like and subscribe if you haven't so you can increase your credit score and get that mortgage, credit cards, or the credit you need. Let's get started. Many things can hold you back from getting the mortgage you want or need. For example, in places like Los Angeles, Las Vegas, Atlanta, New York City, or Miami, a $500,000 mortgage isn't going to get you anything, right? You're looking at 700,000 and sometimes over $1 million. Normally, to lower your debt to income ratio, you would actually have to lower it by paying. But what if there were a way to do this without paying a penny? I'm sure you'd be interested, right? To understand this, you would have to understand the FCRA. The FCRA states that anything disputed that is inaccurate or unverifiable must be removed. You have due process to dispute inaccurate information on your credit report. So even though your accounts may not be negative that have these higher balances that are holding you back, you can still dispute them as long as you actually know what you're doing. And no, you're not going to get in trouble. Again, due process to dispute inaccurate information. Now, I have a couple of links down in the description that are going to help you to learn, in addition to my videos, how to remove these accounts. But I will make something specifically on removing positive accounts causing a higher debt to income ratio. Now, what about those late payments? A lot of people don't realize we are talking about interest rates between 7 and 12%. We're not talking about 2, 3, 4, or 5% interest. And to understand the problem, listen to this example. Let's say that you have a $200,000 30-year conventional mortgage at a 4% interest rate. That's $43,000. However, because someone has late payments or a paid collection, even from 2 years ago, now we're talking about a 5% interest rate, and that interest has now doubled to $86,000. These small things can make a huge impact on your wallet. I work really hard for a living. I'm not trying to put my money in somebody else's just because I didn't do my due diligence. Instead of jumping into getting the fastest mortgage approval, you should be looking at getting the best rates. And you do that by going in with at least a 740 credit score and by ensuring you have zero negative items on your credit and by lowering that debt to income ratio. When they pull your credit report, even though those accounts still exist and you are still paying on time, they are not going to see that you have a $50,000 personal loan, any of these other things that can make those numbers look not so nice and hold you back from the goals that you need. So it's just going to be what they see on there. No, this is not illegal. Due process to dispute inaccurate information. Now, let's talk about those negative items that can hold down your credit score. So, late payments need to go. I don't care how old they are. Collections and charge offs should not be on there. I don't care that you paid it 2 years after it was charged off. It needs to be removed. I don't care if it was a medical collection, but it needs to be removed. When you talk to that loan officer, even if it's on the phone, they should be like, wow, John, wow, Jane, I normally don't see a 740 credit score, zero negative items, and your debt to income ratio is legit. What type of loan were you looking for? Because now it gives you buying power. See, I talked to a loan officer yesterday. I was asking questions because I'm always trying to learn and share this information with you. She said, which is why I created this video, I spoke with a loan officer yesterday and asked a couple of questions and learned more about your buying power and what they are looking for when they look at your credit report. If you are trying to get the highest loan amount and lowest interest rate, you need to do is have a minimum 740 credit score, zero negative items, no tax liens, no bankruptcy in the past 10 years, and you should be golden. If you have questions about this, post them in the comments. If you want to learn more about how to remove these negative items from your credit report, as well as removing even positive things so that you can decrease your debt to income ratio, smash that like, subscribe if you haven't done so.